Welcome to the stock workout where we flex on the market to make gains. In this video, I'm going to be talking about Orbital Energy Group, ticker symbol OEG. Now, this had a huge run up and it has had a sell off yesterday. Now, that's got a lot of people panicking and worrying. However, I think there's a justification for this and I'm not too worried about it. It will come under the bracket of healthy chart action, and I'm going to explain why. Now, I'm recording this video pre-market on the Thursday the 3rd, so it's just before market opens, just to give everyone an indication of some support levels that they should keep an eye on, especially today. And so let's get started with it. So the run up that we had was over 115% within a day. So if we see up here, so from the bottom of the peak all the way to the top, you can see here that was 135% that we ran up within the space of one day. Now, it is pretty normal for there to be a sell-off after a run up that big, because it can't continue just running up 100% every day, otherwise the stock would run out of steam. Profit takers will jump in, and when they've had some people take profits at 20, so when they've had a run up of 20%, they'll take their profit. Some people would, once they've doubled their money at 100%, they will take their money out, and that's pretty normal, and it's a good idea to do as well. But where does that leave OEG on the whole? So we had this run up of 135%, and then if I get rid of this info line here, and then I mentioned that it seemed that we were forming a bullish flag formation here, with this being the pole, and this being the flag formation here. However, that was post-market, and then on the pre-market on the 2nd of June here, we just had a huge sell-off. That 21-day EMA crossed below the 50, 100, and 200-day moving average. However, don't be too worried about that. This is a very microscopic view of this stock. This is the 5-minute chart, and as you can see here, just in the pre-market, the 21-day EMA crossed over that 50-day moving average and touched the 100-day moving average. So I'm not too worried about that because it's a very zoomed in picture of the stock on the whole. But for those of you that are trading this on a swing trade basis or a daily basis, or are worried about this huge decline, this is why I'm not too worried. So that 21-day EMA did cross below all three moving averages. At the moment, it is touching the 50-day moving average. Now, if I quickly draw a fib retracement from the bottom of the run up all the way until the top, which is roughly about here, you can see that the stock now is currently sat at this 61% Fibonacci retracement. So after this huge run up, it has retraced down to the 61%. As we know, that 61% is a golden level of retracement, which is why I'm not too worried about this. So right now, this is showing me pre-market we are sat at $5.31. Yesterday we had a decline in the share price we had a decline in the stock price of 31%. That's 31% after a 100% run up. So really, we are still quite heavily up from where we were 2 days ago. So 28th of May. So we are quite heavily above where we were back then. So back then we were at about $3.50, and now we're at $5.30. So that is still quite a difference. Yes, it's not 130%, but we have retraced and we are sat at that 61% Fibonacci retracement. This Fibonacci retracement is showing me that the support level, the 61% Fibonacci retracement, is at this $5.31 mark. So $5.31 is where it's at pre-market. So it is sat at that level. Now, in my opinion, if this broke down below this price and we continue to see a slight sell-off, the next support level would be this $4.51. And in my opinion, I think that if this does break down, it could quite possibly see that $4.51 point. It could quite possibly come down to that. So that is one price point you should keep your eye out on. Is this $5.31, and then after that is this $4.51. But if it doesn't break below that point, and yesterday it did sort of bounce off this 1, 2, 3 times, and it's touching it as well for a fourth time in the after hours. It was sort of hovering and bouncing above and below this 61% Fibonacci retracement. So hopefully we will have a solid bounce off this. So the price points that I do want you to keep in mind are this $5.31. So I'll just mark that on the graph here. And then after that, do keep in mind this $4.51. So if any of you are in profit and you want to take your profits, if it broke down here, this would be a good point to put your stop loss, take your profits here, and you could buy back at a lower price. Now, for those of you, and this includes myself, who are currently in the minus, because I bought this way back in January, I've been averaging down, but I am still in the minus. Just continue to hold. Continue to hold. Now, so yeah, I do have skin in the game. I've owned this stock since the last 6 months or so, and I have seen it decline. I have been averaging down a little bit, but not enough for me to be in a profit at the moment. So all I'm going to be doing is holding. And my advice to everybody else, and I'm not a financial advisor, so please do your own due diligence, but hold. Just hold it. Because if you're in the minus at the moment, it's a paper loss. Your loss is only confirmed when you press that sell button. That's when you've taken your loss. That's when you've accepted it. Now, if you hold this, it might not go up immediately. It might take a little while. It might take a few weeks, but slowly it will climb up. Now, as long as we hold this $5.31, if we get a bounce off this, we could see higher highs in this past few days. We could see a higher high, but that is a point that we do want to see. And remember, this is only a could. We could see higher highs in the next few days, or it might take much longer. This is something nobody knows, but this is your first level of support. So if you are in the minus and you're in a loss at the minute, just hold it. Don't sell, because once you sell, you've confirmed that loss. Whereas if you hold it, you could in the coming weeks or the coming days, weeks or months, you could see yourself be in a profit. And a lot of people have been in that situation where they regret selling a stock a few weeks after, because the price recovers and then they're like, I should have held it because I took the loss a few weeks ago, whereas if I held it right now, I would have been in a profit. So do hold it. Now, also, another thing to take into consideration is this is a small cap company. So the market cap is only 274 million. Obviously when it was up here, I think it was over 300 and something million, but at the moment it's 274 million market cap. It's a small cap company, so a little bit of good news will make a big difference and push it much higher. A little bit of bad news and it will come down much more. The reason why you've seen this sell-off, there would have 100% been a lot of profit taking. And a lot of people taking profits brings that stock price down. But if we hold this $5.31, this 61% fib retracement, even if it comes down to this 78 fib retracement, I am still going to continue holding. Even at $4.51, if it holds that and then bounces off that, I would still continue holding, because I'm not going to take the loss on this at the moment. I'm just going to continue holding this because I do believe in the company, and it's got a small market cap. This company is still growing, and one good thing about this company is the fact that they do so many acquisitions. They've done so many partnerships and acquisitions, and even this deal that's happened with this 700-mile thing that they are, this 700-mile engineering thing that they've done with their company TEC, their subsidiary. Remember, TEC is a company that Orbital Energy acquired only few weeks back, maybe about 6 weeks ago. So this company, Orbital Energy, is going out and acquiring more business. They are rapidly growing, so that is a good thing for this small cap company, and that should make you believe in the company. Even if the share price does move up and down, believe in the company and hold it long term. I'm going to be holding this long term myself. So anyway, in a summary, yep, that is the 61% Fibonacci retracement is where we're at now. If you see a breakdown in the price from there, the next level of support is at this $4.51. So that's just a quick update. I just didn't want people to panic. We had a huge run up and we have saw a retracement in that price to the 61% Fibonacci retracement. That is healthy. That is healthy. This stock cannot go up 100% every single day. Just understand that. So this is a healthy retracement, and hopefully from here on out we will see that price increase once again. If you appreciate that, drop us a like, hit that subscribe button. We are well on our way to 1K subscribers, and I'll see you on the next one.